Welcome, we are Group 7.1 and we are presenting the Blue Hotel. Our management team includes Martina, Eva, Corey, Neville and I. And we will provide an in-depth analysis for each quarter for our property. For the background of the hotel, we are a 3-4-star hotel located in the city center. Our hotel is 8 years old and we have 250 rooms, 200 standard rooms and 50 premium rooms. Our facilities include a restaurant, a small pool and an outdoor recreational area and a 2,000 square feet conference and event place. Moreover, no refurbishment have been done since the opening of the hotel due to the softening economy and lack of available funds. In addition, we are facing that our service and now, for our actual situation. In order to establish our positioning and pricing strategy, we analyzed the hotel past information and we came to a conclusion that our property had a steady decline in the last 3 years. The occupancy, ADR, GOP have declined. Therefore, we can conclude that we are in a biased market. The government, after a favorable tax incentive, has attracted 12 new companies in the region, and a new conference center will open soon. This information is very useful as it allows us to properly choose our target market, which is business travelers, and therefore we will focus on increasing the price. This premium price strategy will allow us to differentiate ourselves compared to our competitive set. We will therefore refurbish our meeting and events area to be able to deliver a premium service for our clientele. Business clientele is a weekday customer. We will therefore adapt our service to attract a wealthy business traveler. Refurbishments will be done before high season to add value to our property and deliver a premium service. And now, on to my colleague.
We began the first quarter with a low demand in January, but government intervention has allowed the relocation of 12 new corporate headquarters, impacting business and corporate demands. Therefore, we decided to mainly focus on business travelers. We have decided to sign RFP for corporate contracts to increase occupancy during the low season. We can see that the restaurant of the hotel has been seeing a steady increase in its revenue due to the increase in its use. Due to the low demand at the beginning of the season, we decided to start renovating meeting rooms and parkings, as well as hiring a cleaning company to clean our lobby and public areas, as well as premium guest rooms. We chose this as a strategy to differentiate the Blue from our competitors, while being able to offer, in the next period, a premium service for our target market. We decided to add facilities, aiming for a competitive advantage, to increase the value perceived by our customers. Therefore, we invested and now we have a valid service as well as a travel and tour desk for the entertainment of business travelers after their working hours. In the first quarter, our main target markets were business and leisure travelers, due to the increasing room demand for 3 or 4 days corporate and association meetings. Altogether, our RGI and our ARI have increased highly compared to our ComSet, but our MPI has decreased. And now for the second quarter. After a successful first quarter, we decided to focus on increasing the quantity of small groups reservations during weekends. This will be a good opportunity for us, as we are usually fully booked during week by business travelers, but quite empty during the weekends. Our RGI and ARI have decreased compared to our ComSet, but our MPI has increased. This month, we decided to hire a cleaning team to improve the quality of our standard guest rooms. Secondly, as facilities, we invested in a retail shop and a lobby kiosk, once again to add value to our property. Our main target markets are still business and leisure guests. During the second quarter, 2 RFPs were placed. Unfortunately, our hotel did not offer prices that were competitive and attractive enough. Why? Because our prices during this quarter were quite high, varying from 200 and 250 per room. This was due to all the refurbishment, cleaning, and investments that we did. We decided we'd rather lose those requests because it would not have been profitable enough for us.
During quarter 3, which combines July, August, and September, we experienced a higher occupancy due to the fact that the high season starts. This was an occupancy percentage of 65% or better. We could observe that our general economic condition improved, that there was a 20% increase in load factors for air carriers, and that the demand for small groups for family and social events, especially on weekends, increased too. In this quarter, we decided to invest in our lobby area, associate facilities, front desk, and meeting and event facilities. Bearing in mind that we are in a high season, our target markets varied. We had more small groups, families, and leisure travelers, so we did not only focus on business travelers. Moving on, our last quarter combines October, November, and December. During this quarter, our expected market occupancy changed to 60% on weekdays and 55% on weekends. We experienced a record response from tour wholesalers and individuals. Also, welcome centers are experiencing high telephone and visitor traffic. Finally, the demand for small groups for family and social events is continuous. For our strategic focus, we decided to put our attention on leisure customers during this week since their demand is higher at that time period. Referring to our investments, this quarter we worked on our restaurant, associate facilities, parking, grand pools, bar lounge area, and our front desk. Our target segments were leisure guests and our RFP. To start with, for the third quarter we received an RFP during the month of July. It required 200 double occupancy for a total of 2,400 standard nights in a period of 4 weekends. This would take place from Friday to Sunday night. We did not get the RFP since our rate was higher than the competition, but this did not suppose a problem for us since by lowering our minimum rate even more would have meant losing revenues. For our last quarter, we received the last RFP during the month of November. The requirement was 100 single occupancy with 95 standard and 5 upgraded, total room nights 1,250 standard and 80 upgraded, for a period of 4 consecutive weeks from Monday to Thursday night. Once again, we did not get the RFP since our rate was higher than the competition for the same reason as the other ones.
As we can observe on the price value slide, during quarter 1, our hotel was placed in the second quadrant, cutting the line with the fourth quadrant, meaning that we had higher prices and an average quality in comparison to our competitors, who were mainly perceived as having low prices and low quality. During quarter 2, our hotel moved into the fourth quadrant, meaning that we had high prices but a lower quality in comparison to our competitors, who were mainly perceived as having low prices for an average quality. As we see in quarter 3, our hotel moved into the third quadrant, meaning that we had low prices for low quality, whereas our competitors were perceived as having low prices as well for an average quality. And finally, during the fourth quarter, our hotel moved into the middle of the quadrants, meaning that we had an average price for an average quality. Most of our competitors followed the same path and landed in the center of the price-value map, with some of them being outliers. To the reputation management slide. Here we can observe that during the first quarter, our reputation stayed on par with the competition, except from 3 outliers. We had a high reputation in meeting rooms and parking grounds and pools, 91%, due to the renovation of these facilities, but a bad reputation concerning our associate facilities, which were 49%. During the second quarter, our reputation sunk moderately in comparison to the other hotels, except for the environmental program, which skyrocketed up to 100% due to the renovation. Our reputation concerning our associate facilities are still very low in comparison to our competitors, because most of them invested in it, whereas we didn't give any attention to it. In overall, most of the hotels refurbished or renovated their facilities during these periods to be prepared for the high season. During the third quarter, our reputation stayed quite on par with the other hotels, around 55 to 65%, with the environmental program still being the only positive outlier. The reputation for the associate facilities could be ameliorated. Refurbishment and renovation in general were scarcely being implemented by us and other hotels due to the recent ones. During the fourth quarter, our reputation dramatically went down but stayed on par with most of the hotels, with our guest room standard and premium being the only outlier, 52%. This outcome is due to hotels not investing in any renovations and refurbishments at all, due to the demand of customers being lower than during the high seasons. Now let's go to the RevPAR, ADR and occupancy analysis. For the market index of the year, we can see that our ADR in the beginning of the year was on its lowest point and meeting up with the baseline in February. Over the course of March to June, our ADR line overcome the baseline and had its peak in April, before due to the price increase in our rooms. It sunk under the baseline again during July until September, due to the fact that our competitors raised the prices, but we didn't change that at all. In October, we were able to overcome the baseline again until it finally stagnated in December by raising the room prices by a tiny bit. Now let's go over to the occupancy rate in comparison to the competitors. In January, we had our highest occupancy rate, but it dropped to a low from February to June. During the high season, quarter 3, our occupancy rate went up again, but it fell on par with the baseline in November and increased in December again. Our RevPAR in comparison to the competitors stayed on the same baseline from January to February and has risen over the baseline during the period of March and July, having its highest peak in March. During August, it dropped by a large margin, but could recover itself over the course of September to December.
Moving on to analysis and findings. As we can observe in our market penetration indexes graphs done by month, transient guests have little variation since they are near the baseline, whereas discounted and group have bigger fluctuations, and groups they have the most. We find our year-to-date room sold data. We did not focus our attention nor invest in wholesale, and as a result, we did not have sales for that distribution channel. Our strongest distribution channel was Indeed Direct, followed by GDS and then OTAs. I will now give the summary of the year. We have completed the year with $169,860.69 of net profit in December. In July and in August, since those 2 months were our peak seasons, we had the highest revenue and profit, which was the result of our direct marketing strategy. The GOP was 43.18% for year to date. Our room revenue was $10,608,628. We had 91,250 rooms available by the end of the year. We sold 58,852 rooms in total. Our weekday occupancy percentage was 64.53%, and weekend occupancy was 64.19%. In total, we had 64.43% of occupancy rate. Our GOPAR was $55. The RevPAR was $116, and our net profit for year to date was $1,872,357. From the year to date summaries, we drew a few recommendations for the Blue Hotel. We recommended to keep the similar price change patterns as we did for this year. The hotel should continue to invest in hotel facilities, and this way, the guest satisfaction rate can go up. After renovating the rooms, it is possible to increase prices slightly, and in this way, it would add value to the customers. Since the facilities category had the lowest satisfaction rate, there should be regular contract cleaning in the following months. In the long term, the rate changes should be monitored carefully because price-sensitive customers can easily go to the competitor's hotel who offers slightly lower prices than our hotel. The hotel should maintain to invest in refurbishments of the meeting areas since those are the most widely used for business people. Since the main target is business people for the hotel, the refurbishments should be based on the business areas. Regularly investing in hotel facilities and services would lead to an increase in the non-room revenue. Additionally, by investing in the associate facilities, the employees could work in a better environment, which would lead to better service, more or less. And this is the end of our presentation, and thank you very much for watching.